All right, guys. Apologies. I actually forgot to. Let me just double check. Sorry about that, guys. I apologise. I started the session without unmuting the microphone. So let me just take a little step back then, just before we begin. All right, sorry about that, guys. I apologise. I was talking away, and unfortunately, okay. So you probably missed the introduction. Really, we were looking at the news, and let me slide up Forex Factory again. And we were just talking about this news event, which is the non-farm employment change number, and it's the prelude to the non-farm. The ADP is the prelude to the non-farm number tomorrow at 1:30 p.m. London time. So it'll be interesting to see what number we get on this, and we're looking. Nice to have you all join us, guys. Apologies for that. Thanks, Mike. Sorry, Scott. So look, we'll crack on. So we're going to come back to Forex Factory now very, very shortly at 1:15, just to see how these markets behave with this news. And really, we're looking for a strong deviation, either to the upside or to the downside, and it's likely to affect the dollar accordingly. Same situation for the non-farm manufacturing PMI. It's expected to see a really strong. Yeah, great stuff, Lewis. I know. Apologies. I've done it on a couple of occasions now, and it's painful stuff. So apologies for that. Okay, so we're due to expect expansion at 3 p.m. And 56.8. So again, a strong deviation to the upside and to the downside would be interesting for the US dollar. And it's just finally crude oil. It's expected a negative number, which is likely to support the price of oil. And let's see what number we actually get. So we'll come back to Forex Factory in a second, because I want to just go through the markets and really just kind of show you how little has been happening, really, to be fair. We were trading this morning. Well, we were looking at the markets this morning, and decided to pack up very, very early, purely because there was very limited, really clean cut, easy to identify opportunities. So the euro dollar is sort of potentially threatening to extend to the upside, but has pulled back considerably. So a lot of indecision there. There's a bit of strength coming into the pound, but we're firmly between this range, and we do have a bit of resistance just above these current levels. So it doesn't necessarily represent a high probability trade. We do have the dollar yen, and there's no real kind of purpose behind the dollar as things stand. One trade that we will look at would be the idea that, and we'll take it from yesterday's low, just in around here, the 111.31, would be the potential for this market to create a structural failure to the downside, and that would imply a little bit more yen strength creeping into this market. So really, we're looking at this low here, and the idea would be we've made a low, the market has bounced back, we've created a double top, first top, that's your second top, and now this is the beginning of potentially the next leg lower. So really, a break beneath this candlestick here, where we are in a selling candlestick, so we do have that going for us, and we would just like to see continuation to the downside from this level. So I'm not saying that we're definitely going to trade it today, but we will put it on the watch list. So I do want to go in and just see this level and see how price is behaving around that level, because it may not be a great viable opportunity. So let's call it half an opportunity. Now, one of the trades we were talking about last night in our and in this morning's daily trade watch was continuation with Swiss strength, and we can see that creeping into the market. So we're in this market on a daily time frame. For those of you that were able to join us for our capital growth webinar last night, we've conducted a lot of analysis on this one and would expect this market to continue lower. And as you can see, it's moving lower, but not with a huge amount. Let's look at it on a 15-minute time frame. So we are grinding lower, but really we're in a sort of a 15-20 pip range. We would expect this market lower. So we had a double bottom, we had a nice strong pullback. It sort of moved sideways a little bit, and now it's attempting to squeeze lower once more. So this is one of the trades we were looking at this morning, but it was the only trade really to focus on to any great extent. So we're likely to see continued strength, but we'll come back to the US dollar in a second. So of course we don't necessarily want to get into any of these trades prior to the ADP number, just in case. Nothing happening in the dollar CAD. As you can see, we're just sort of consolidating around these highs. Aussie dollar threatening to push higher, but firmly within yesterday's highs and lows. So again, a difficult picture. The New Zealand has strengthened slightly during the Asian session and has pulled back quite considerably. So again, a mixed picture. This is where we're seeing the pound strength creep back in. We're seeing the euro give up. Well, yesterday's candlestick was quite indecisive in the end. It's kind of a long-legged doji candlestick, so a horrible market to trade. But you can see this ascending line providing support at these lower levels. So one to watch, but not really to trade with any real strong certainty. Certainly, with a lot of Brexit-related news events over the course of the week, we're finding a bit of a mixed picture, to be fair. Dollar yen has the potential to squeeze over. This is kind of a type of picture that we're looking at here, kind of a double top scenario. Slightly better price action in the dollar yen if the dollar starts to weaken, but we shall of course wait and see. So nothing of any real importance, and we're getting a bit of strength coming in against the yen. So really these foreign exchange markets are telling us that they're trying to work themselves out. They're trying to establish a little bit of a directional bias, and until that happens, we kind of need to know when to trade and when not to trade. So it's a firm pillar for our skill set with our traders is to be consistent with your approach, then learn how to be disciplined with your capital, not frivolous, not taking chances, not giving the market the benefit of the doubt, none of those things, but to be actually disciplined with your capital and really focus on protecting it first. And if you can protect your capital, then you open yourselves up to generating consistent returns on a regular basis. And that's what trading's all about. That's what most traders really don't seem or want to grasp. And the final one is patience, really, with regards to knowing the market conditions and deciding when the right time is to trade and when the wrong time is to trade. And we do kind of utilize a saying quite often, whereas if you're in doubt, stay out. And what we're kind of finding across a number of different markets is a little bit of indecisive price action. So really, it's a bit of a difficult one. So I'm just going to move over to the ADP now, just to see how it impacts these markets. Just to flick through, there's a bit of strength coming back into gold, but we do have resistance. Not much is happening in the oil markets, a little bit of strength coming in off those lows. And then as we flick through these equity markets, I'll do so very quickly so you can see there's not a lot happening really. There's a little bit of retracement across the board. So let's go and have a look at the smaller time frames in the euro dollar. And you can see that it looks like there's a bit of a negative ADP figure coming in. So it looks like it very well may be less than expected. So we get up this. Let's see what that figure is. So we're effectively seeing, in fact, it's a very, very small move to the upside. So let's get a handle on this news event. So we're expecting 195 jobs. It looks like it's coming in and around 195,000 or maybe 180 or 185,000. Let's see what that figure actually is now. It's always a nice little guessing game. Actually, a little bit less than that, 163. Okay, so we've had a slightly negative figure and we're still only seeing kind of a 6 or 7 pip initial move in the first minute of this this news event. So as you can see, a negative number. You can see how this fits with previous numbers. We have had a few recent lows, but not very many in number, as you can see on screen. So we're coming in below expectations. So we're likely to see a little bit of dollar weakness creeping into these markets. So with that, we can look at the dollar yen and see if an opportunity presents itself, and we're getting very close to that level now. So we look at the daily time frame, we can see that potentially we could look for opportunities to sell this market, and as we look at the smaller time frames and scroll right in, we can see if these opportunities present themselves or not. So we'll have a look at the dollar yen, and we'll also have a look at the dollar Swiss. So we're getting this little break to the downside in the dollar Swiss. That is what we would like to happen. The only thing that's concerning us about this is the small range for some of these markets. Sorry, Corey, I'll come back to you now just very, very shortly, if that's okay. Just give me a few seconds. I'll come back to you. So we're just seeing very, very small range bound movement. So yesterday's market for the whole course of the day was 45 pips. Even at what looks like a really strong, long, sort of visually in this market, from high to low, we're talking about an 80 pip movement. What we'll do is we'll get up, we'll insert what's called an average true range indicator. So we'll do a 20 period. So on a daily time frame, all this does is just calculates, it adds up the actual range of the last 20 days, and it gives you a figure. And over here we can see that this market over the last 20 days has moved on average about 50 pips. So if you get into a market like this and you maybe risk 10 or 15 pips, you know, you're looking for a 1-for-1 really to actually sort of book in profit, and then you just got to weigh up whether that is ultimately a possibility. We can look at the range. Firstly, we'll look at the current range from high to low, 97.19, and the low is the 96.86. So so nearly 40 pips already. So we've only got about, if we work with the average over the last 20 days, we've only really got about 10 or 15 pips benefit to the downside. So you're really looking for a 1-to-1 positive risk reward on this market. Plus the only other problem we have is a 96.52 level, which is down at these lows. It just may take a day or two to get there, unless this is a particularly explosive day, which is obviously possible, but from a probability perspective, not fantastic. The real trade was below the 97.08, and those of you that were able to access the daily trade watch, you can see us talking about this and talking about that level and that opportunity that it would potentially give. So so Corey, sorry, apologies, I'm just looking at your comment now. Outlook for the pound dollar, please. Yeah, ahead of ADP. Yeah, well, the ADP and the ISM is obviously dollar related, so we're not looking for that to impact the British pound as such, but of course it will impact the pound dollar to a certain degree. So we've had slightly weaker data, so we'd expect this market to continue to the upside over the shorter term period. So we're that's exactly what's happening, and we'd expect the dollar yen to sell off. Now the big number is actually tomorrow with the non-farm. So again, it can often give traders an opportunity to position themselves prior to the. So you're looking to buy. Yeah. So on the pound dollar. You know, certainly a viable trade is to the upside, but then you need to take into account the potential positive risk reward in this market. So we do have these highs sitting up here. We have a descending level, so we're very likely to run into resistance. As you can see up at these levels in here, we could put a kind of a horizontal level in here as well. So we'll be approaching. So be very careful of the 29.68, which is only 10 pips above this current level. So that's the only concern I would have, Corey, for you. Now there's an opportunity for a complete breakout, and if we get a breakout of this level, so i.e. above the 29.82, can actually give us a higher probability trade actually to the upside. So on a daily time frame, it would be breaking above yesterday's high with the expectation to get a nice push up to the 30.44. So not necessarily disagreeing with you, it just has some significant levels of resistance just above this current price. So yes, short-lived trade, more of a scalper's trade than kind of the trades that we look for. So one of the, if you can see on the right of your screen, one of the things we do is to effectively manage trades which will give us an opportunity to let our winners run. The problem is, if you're running into these levels of resistance, the likelihood is price is going to kind of more than likely bounce off that. So it doesn't really give us the potential to let a winner run. Not if we're getting in at these prices down here. That's what I'm kind of more referring to. Now, if the market decides to push higher, and creates from these levels, starts pushing up these levels here and starts creating a bit of a structure and starts to break out above that level, then that's a different story. That has a little bit more potential to the upside, so you can hopefully get a positive risk reward on that trade in the pound dollar. So so we have these levels just sitting in here. So just right now, from a probability perspective, it doesn't give us a fantastic opportunity, Corey. I do hope that makes a little bit of sense. And for us right now, we'd certainly be advocates of being a little bit patient with this market and just waiting for that clear cut, or a trade that's a little bit more clear cut. So getting a bit of buying pressure coming in, as you can see. So we've got this level in here, the euro dollar, just pushing higher. So there's likelihood for a little bit of continuation to the upside. Let's go in and just have a look at this, because we don't really have a huge amount of fantastic opportunity today. Doesn't mean that a trade wouldn't exist. So there's a bit of resistance in around these highs up here. So let's see if this market can break above these levels. And we're just at these levels now, and it's the 1650 as well. So we're only talking about a 10 pip move to the upside here. My pleasure, Corey. Hope that makes a little bit of sense. And again, things like positive risk reward and that potential to let those winners run is an important part of our approach. So if you're looking for a small scalp, then yeah, it can kind of look like a different opportunity, or maybe even a better opportunity. There's obviously good, strong arguments to suggest that this level in here could provide a little bit of support. We've got a W formation, so breaking above this high here is likely to add a little bit more volatility to the upside. So that's the euro dollar, the pound dollar, the dollar yen. So now we're getting a squeeze to the downside in the dollar yen. So we have a low just 3 pips below this level, and we're then below the 111.20 with reasonable scope to the downside. You know, you could see this market extending a little bit lower. We are prone to some long range days, so a little bit more scope in this market potentially to the downside. So let's see if those opportunities reveal themselves. Okay, dollar CAD not doing much. So really, it's a dollar weakness story today. In the end, after a significant amount of consolidation. So we can flick between these trades, and of course the Swiss franc. So we're getting that little move below. It's 96.89. So let's look at these 4 candles in tandem. So this is our trade plan for the session. So we'll put the Aussie dollar, the dollar Swiss bottom right. And we'll put the dollar yen. We just have this level in here which we're just looking at. So now let's see if we get a little bit of a pullback to this level of support, and see if we get an opportunity to get into it. So we've been sideways moving for a little while with obviously a bearish aspect to that trade. So really we can afford to be a little bit more patient with these markets. I think that's probably the best view. If any of you guys are looking at any markets, do let us know. There might be some opportunities that you're liking the look of. One market I want to have a look at is the Euro Aussie. So we've had a bit of a rejection of this level the last couple of days. There was at one point the potential for this market to roll over, but we never really saw that in the end. We just saw a little bit more European strength. And now today's European strength, so the Aussie dollar's sort of gaining a little bit of strength on that market. We'd expect continuation in these markets, but we're not really getting much follow through across any of the equity trades. Same with the oil markets. Let's see what happens with the crude oil inventories. Gold is just pulling back. We're currently at the descending level, as you can see. Not much going on in the yen pairs. Euro yen still contained within yesterday's highs and lows. Potential for the New Zealand to just bounce above it, but again we have this small range problem. So we can just revert back really to the 4 trades that we're looking at effectively. So So now what we want to do is wait for a reasonable pullback for us to get into these markets. So we prefer to get in to the dollar Swiss and potentially the right. So we're still looking for a price to break below the 111.17 level. That's the important trigger for this market. And as far as the dollar Swiss is concerned, if we look at it on a big screen for just a second, yeah, this low is pretty accurate. So really, our trade plan for this market, we just have to be a little bit patient, really, that's all. So looking at the dollar Swiss, we're looking for a sell trade. If the market comes back somewhere within this region here, we'll be looking for an opportunity to take it to the downside. So that's the trade we're looking for. We can see if there's going to be a breakout trade to the downside in the dollar yen. We do want the pound to break with consistency above 29.68 level, and I think that same level exists in here for the euro dollar. So these are the levels we're looking at based, and the trade behind the signals behind the trade are very much based in, I'm just conscious of this market just moving now as we're looking at it. So let's go into this on a minute time frame, and really we're wanting to see if we can capitalize. So now we can get into this market here below. If we get a close below the 96.77, and we can use the 85 handle as a high in this market, but we need to see this market close below that level. We've got and we'd be looking to trade the trend. We might not be hanging out for lots of profit in this trade, so we want to see if this closes below that level on a 1 minute time frame, and then if we get continuation, then we're quite happy to get into that trade. So let's wait and we'll see. So these are trades where we might not necessarily get the pullback that we're looking for. So this is why we wait for the close beneath the level, is because we can see that there's now indecision. So this still has the potential to become a bit of support in here around the 96.77 level. So, and then the important level becomes the 96.84. So depending on what price is doing, if we get a rollover in this way, we'll sell it to the downside. If we get a break above that level, then we'll wait for it to push higher, and we'll look to sell it again at a much higher price. So we're still looking for opportunities to sell. We're just going to have to be nice and patient and wait for those opportunities to arrive. This is the area now that we're interested in for a bit of a sell trade in these markets. Not getting a little bit closer to those highs in the euro dollar, but as you can see, we're still a little bit off that level as far as the pound dollar is concerned. This is a 1 minute time frame. Let's see how important the 111.17 is. So it's a fairly important level. So let's see if we get a bit of a pullback to just another pip or so, and if we get a bit of price action like this, we're quite happy to get into it. So let's see if the 96.85 stacks up for the dollar Swiss. I'm not really getting the feeling today, guys, that we are going to be holding out for big winners today. It certainly doesn't feel like those markets, but what we should do is to just, if we do get into a couple of trades and we make some profit, then we'd be very happy with that in terms of identifying these market conditions and trading the opportunity. Maybe we get a little bit of volatility coming into it. Now doesn't seem. So we want the first signs that this market's going to roll over to the downside. So we're quite happy to buy around this area. We just need the first sign to suggest that this market is going to roll over. We could have a really small stop loss actually in both of these markets. If these are both pullbacks off the lows, then it may be worth. I tell you what we'll do, we'll look at both of these markets, we'll look to get into them as soon as they're showing signs of moving to the downside, but let's take half the normal size on the trade. So we're adapting our approach to risk depending on the market conditions. Yes, we do expect the dollar to weaken, so we are supportive of price to the downside, but we're not filled with huge confidence. So yes, they are potentially high probability trading opportunities, but there's a number of factors which just make us feel a little bit uncomfortable. So what we'll do is we'll trade just much smaller size than normal. So this is half the normal size that we would ordinarily look to trade, and we'll just take a couple of opportunity trades. So let's see if we get a little bit of a squeeze lower in these two markets. So I'm happy to get into, if we get a little pulse lower. So I'm happy to get into both of these markets now, just at these levels. So we're getting in on a 1 minute time frame, so we'll see what opportunity we would need. What we'll do is we'll have approximately a 10 pip stop loss. So you see these lows in here, the 111.25. So we can just take a few pips above that. So let's go in at the 111.28. So we just want this market to work really, really hard. Probably a 12 pip stop loss in this market, 11 pips. You could use the 111.31, but no real need effectively to risk any more capital on this trade. And we're going to see if we can start breaking these lows to the downside. The dollar Swiss, we do have this little structure sitting in here. Again, similar logic. This level in here is likely to provide a lot of resistance, 96.89. So again, we can do a few pips above that. So 93, just up at these levels in here. So again, an 11 pips. So we're only exposing 11 pips on each trade. So a little bit more speculative potentially. Although we would expect these markets to continue lower, but we're certainly not putting any major weight behind these trades just because there's a lot of issues that are not optimum really for this type of trade. So all we're literally looking to do is to understand the market conditions and trade the market conditions, not trade predetermined ideals about trading, i.e. trading with the same trade size irrespective of what's happening with the markets. We're certainly advocates of being more flexible when you trade. Look to really focus on your decision-making skills and try and put together a really coherent approach that obviously makes sense to you and that you can build a skill for life effectively. And these are all the nuances that, again, traders really struggle with. So we're happy to be selling around this area. It's a little bit off the low, off the lows of both of these markets. So we might get a little bit more of a pullback, but and we're certainly getting a bit of dollar strength just creeping in. So we're not overly surprised to get a bit of a pullback on these markets. That's why our stop loss is a little bit further away than just these levels here, just in case we get nicked out of it. And we do have major levels of resistance just above it, the 111.25 for the pound yen and the 96.89 for the dollar Swiss. So let's see how these trades are getting on. I've got a feeling they very well may be the only trades we're going to be looking at today. It's not looking like we're... So we're potentially trading the only markets that are giving us even a small signal to work with. You do have trading markets like this, you know, they do pop up every now and then. We do have non-farm payroll tomorrow, so it might be the calm before the storm. So that's likely to provide some interesting opportunities. So not a lot going on in the US equities. Neither with the UK FTSE market or the Euro stocks. So, unfortunately, guys, not an awful lot to focus on. It does make our screen nice and easy to focus on, though. So they're all dollar-related pairs. We're all looking for dollar weakness creeping into these markets, and the levels we're looking at for the euro dollar is a breakout above the 116.59 to the upside. That same level corresponds with the 129.68. in the pound dollar. We're looking for these markets to sell off at these levels and see if we get the next leg to the downside. Same for these two markets. So those are the trade ideas. We're looking for European strength, pound strength, yen strength, and Swiss strength. And as you can see, we're looking for dollar weakness as a result. So that's our trade plan. Hi Lewis, the Aussie New Zealand, any ideas? Let's go over and have a quick look for you. So Aussie New Zealand. So the first thing to do really, which is quite important, is to just gauge the Aussie New Zealand against the dollar. So we can see here we've got a bullish spinning top. Okay, so there's potential for a little bit of support coming in, pushing prices higher. So we have a similar signal against the New Zealand dollar off these lows, and they're both ultimately weak. So we're at the bottom end of a pretty significant run to the downside. Similar situation with the New Zealand dollar. So straight away we've got indecision against the US dollar across both of these markets. So not an awful lot of difference by any meaningful. Yeah, hi Ian. Yes, your messages are showing. Yeah, we can see them. Sorry, you mentioned that you were lip reading earlier, so apologies for that. I think I just missed your comment. But yeah, your messages are coming through, so thanks for posting that. Are you in anything yourself, Ian? Are you looking at any trades yourself? Perhaps you'd let us know. So when you do that analysis and you just compare how these markets are performing with the US dollar, we can go into this market with the expectation, we haven't looked at the price yet, knowing that these are both relatively weaker markets and not an awful lot going on today. So that's the problem we have, and I suppose this price action kind of represents that pretty nicely. Yeah, hi Ian. You're sort of you're just mentioning. Let me see the non-farm payroll. To answer your question, yes, we will be trading it live, but we're working with individual traders on Fridays, so we will be trading it, but they're more sort of personalized one-to-one trading sessions, I'm afraid. So the rest of the week is very much available to trade. So I guess as far as this session's concerned, unfortunately we'll be missing out on it, but only for the shorter term. Hopefully we'll be able to facilitate the Friday as well. So that's just an issue for us Friday afternoons, I'm afraid, for the time being. Oh, I see. Did you post that a little while ago? Sorry, Ian. Let me see. I'm sorry, Ian. Yeah, I'm only just seeing a message now. Are you live trading the non-farm payroll tomorrow? Yes, we are, but we're doing it for a group of individuals. So we're apologies for that. So that's the problem there, Lewis, is the indecision in this market. So yes, we would. I mean, let's step back and just see what's going on with this market. Big move to the downside, a couple of higher highs, and now it looks like we're potentially rolling over to the downside again. So difficult market to get to grips with. You'd have to say there's a significant bit of support of price in and around this level. So when we zoom in, yeah, there's the potential for this market to, if you look at these markets here and you can see the rejection to the upside, there's an argument to suggest maybe below Tuesday's low to actually capitalize on a breakout. But in actual fact, this is a rejection of the lows now. So doesn't really give us any clear-cut opportunity, to be fair. So this is one that we would suggest as well, Lewis, is to just exercise a little bit of patience, if that's okay. And just, it's not giving us a great opportunity. So maybe wait until that's the case. Maybe if some volatility comes in, some volume comes in below the 0.899 level, and we're above the 0.900 level, which is a strong psychological level, so very likely to support prices, but only if we get a significant bit of volume coming in might we change our mind on it. But in terms of looking for opportunities to buy or sell, we'd be looking to sell based on yesterday's rejection, but we clearly haven't got the follow through. So I hope that makes sense. Dollar Swiss, Ian. Yeah, we're currently in the dollar Swiss to the downside, so let me just go back to it and we get all these up on our screen again. So as you can see, not an awful lot happening in a number of these markets. So we're getting a bit of dollar strength creeping into all four of these markets. So we've reduced our risk right down, so we're risking practically very, very little in these trades because of such an indecisive market. And that's really the first step, is to make some decisions with regards to the market conditions and the volatility which we're experiencing. So very well, we may get a little bit of a strong pullback. The market, both of these markets still has to work very, very hard for us to be shut out of this trade. And that's really what stacking the odds in your favor will achieve. If you do that consistently and you place your stop losses at technical levels, that you're just saying to the market, if you're going to take us out of this trade, you're going to have to work hard for it. You're going to have to take out a lot of sellers along the way, in which case you're actually stacking the odds in your favor a little bit more than usual. So let's see if we get a rejection of these lows. We very well may get rejections to the downside, so we'll have to, of course, just wait and see on that. But what we are doing is we're looking at these markets, and we're quite happy to look for opportunities to sell these levels. So we're looking for these markets to sell off. So we've got a directional bias. Okay, we're comfortable with these trades. No major problem even on the pullback. We've taken our risk right down. It's even half of our normal size. So if we get a little bit of profit, we get a little bit of a break to the downside, we book in profit. And as you can see, there's not an awful lot of opportunity across other markets. So we're not really missing out on an awful lot. So we're currently experiencing an extended pullback. So I guess what we're still looking to see is perhaps a structural failure to the downside in both of these markets, and the next leg to the upside in the euro dollar and the pound dollar, and all of that will be conducive for dollar weakness again. Now, again, a significant concern would be the non-farm payroll tomorrow, which is the big one. And if I scroll down to just show you that, we're looking at these numbers in here. Employment change 193. You can see where that fits. There's a pretty consistent number of jobs being created. These are positive job creation numbers, and what it adds to is a reduction in unemployment rate. So obviously the state of employment in a country is really important from a prosperity perspective and from a confidence perspective. So, and it all fits in with the growth story that we're currently experiencing. Okay, so another important news event tomorrow is the average hourly earnings. So fairly consistently around the 0.2. We've recently had a number of certainly more improvements on that than misses. So we've got to sort of kind of weigh that up in our minds really. So we'd want to see figures close to these numbers in order to benefit the US dollar, and we're likely to get a little bit of hesitant price action in the build up to these events. So we're in these for fairly small gains, I guess, even from a take profit perspective. So Ian, you're suggesting that would you look at selling dollar Swiss if it stalls at around 0.969? $9,690. So when you talk about foreign exchange, if it's non-yen related, then it's to the 4th decimal place. So I know you actually mean the 96.90. So I apologise if I'm saying something that you're already aware of. You're absolutely right. If I just asked you to look at this trade and I said, look, just quickly give me a level for you to sell, hopefully you would actually say the 96.90. So you're absolutely spot on. This is the high probability. Let me take these off. This is the level we'd be looking to sell this market, and the reason being is it would fit in and conform, so there is a bit of resistance at these levels, which is why we look to get in at this level slightly earlier, but that's also why we have our stop loss placed at these levels up here. So yeah, that's the natural area for this market to pull back towards. So and we have a similar area actually for the dollar yen. So look at that chart and just, hopefully you can see very clearly the levels that you'd like this market to move back to, and then that does give you at least a reasonable opportunity for some profit, at least down to these lows down here. So it does bode well to be nice and patient. But you're absolutely right. The 96.90 or 96.89 technically, somewhere in and around that level, it would make sense for a good trade to the downside. Because we're looking at these, and if we do get a pullback to those levels and we get a turnaround, we might actually double up on the trade and add to them to create one proper trade. So we'll wait and see. There's no rush for us really. We don't have any major anxieties about these trades. Guys, I'm just conscious that we've got our traders over at the live trade room now, so we're going to switch from this live broadcast through YouTube to our members area for our trading members, where we'll continue to trade these markets for the remainder of the session and see what opportunities we're able to capitalize on. Yesterday we had a couple of really good profitable trades in the end. We just had to wait a little bit longer for them, but we were able to close out about 3:30 yesterday, so it wasn't too much of a late one, and we just had to be really patient again. Quite erratic markets the last couple of days. Today seems like it's a bit quiet, so not so much volatility flying up and down, but more just sort of calm and a bit quiet. So obviously the build up to the non-farm payroll is significant. For those of you that are not members of the Live Trade Room, if you would like to join us over at the Live Trade Room, we're currently offering a 14-day free trial, which can give you access to over 75 or 76 live traders per calendar month. That's what we're offering. Plus, we have a range of education and content available for you in your members area. So really a whole sort of package and educational experience for you. And the good thing is, if you decide to stay on, there's no obligation, there's no contract or anything like that, but if you decide to stay on after the 14 days, then there is only a cost of $9.99 per calendar month. So hopefully you will benefit from that as a value proposition. So please do read the description below, and we'll wind up this session over here, and we'll switch over to our traders in the Live Trade Room. Please do feel free to like and subscribe to our channel. You'll be notified when we go live. We do go live at 8 AM and 1 PM Monday to Thursday. Friday is the only day which we're not able to go live on YouTube just yet, but I'm sure that would change pretty shortly. So also you can connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are of course there, all up on screen. And thank you very much for joining us, guys. Thanks for your participation and your questions and your trade ideas. The one thing I will promise you guys is I suppose market conditions and fast-paced volume-based markets are very frequent, and you go through peaks and troughs, unfortunately. So you've got to ride the difficult conditions, protect your capital, and sometimes be a little bit patient, which is something that's quite difficult for traders. But if you learn how to do that, then when the markets start to open up and you get loads of really good high probability opportunities, you'll see that we'll be so much more active. We'll be getting in and out of trades a lot more, with the expectation to cut a loser short and let a winners run, and really see if we can start seeing significant returns for the time we're putting into it. It just so happens most of this week has been a little bit frustrating, been a bit erratic. That's all market conditions. You've just got to understand that those are the conditions in which you're trading, and we'll navigate around them basically. So so that's the plan for us here. I'll let you guys go. We'll switch over to the Live Trade Room now. We'll be over there within the next minute or so. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.